I was born and raised in Detroit. I love my city. I adore all the growth and the architecture and all the amazing things we've accomplished, whether it be Motown or the automotive industry. And as I've traveled the world and spent time and lived in different places, I find that there's no place like home. Detroit will always be home to me, and it'll always be a place that I love. I love the staple, which is amazing. And it really inspired me to do my podcast, which is called Detroit Girl Transformed. I decided to do this podcast on Resilient Radio, which is a Black-owned station based in Detroit. And it really highlights the transformation of my city while I, as an individual, was transforming. And what kind of people come out of Detroit, which are really people with hustle and grit, who are determined and also exhibit perseverance. The podcast will really focus on different people that have different phases of transformation, whether it be their finances, their well-being, their travel experiences, how they transform their relationships, how they transform their spiritual beliefs. Because at the end of the day, we all want the same thing, and that's what's best for our city, and that's what's best for our legacy and our future and our family. Happy Transformation Tuesday. I am your host and your favorite Detroit girlie, Tony Carter. Welcome to another episode of Detroit Girl Transform. We are in season 2. What up, though, to my Detroit players, and hello to all the DGT guests. I am really, really excited and stoked about this conversation tonight. I am always looking to keep my coin and definitely live a lifestyle of lavish luxury. So you will see many Money Moves episodes. We are in Money Moves Volume 2, and I have the pleasure of introducing Subira Louineus, who is a proud Detroit native, tax strategist, and founder of Expense Financial Services. She holds a BBA in finance from Temple University, and for those of you who don't know, Temple's in Philly, and brings over 14 years of experience in accounting and financial operations, including a decade in nonprofit accounting. Today, she helps small business owners uncover hidden financial opportunities and scale with intention and make smarter money moves. So we are here to learn from Subira on how to thrive as an entrepreneur, and also some tips and tricks on tax as a tax strategist on how we can continue to build our long-term generational wealth. So yay, welcome Subira. Woo!
Thank you. Thank you for that introduction, Tony. I am so happy to be here and to be a part of what you're doing with this podcast. Being a Detroit native, I consider myself to be a Detroit girl transformed and constantly under transformation. So I think that, the information you're getting out here with finances, mental health, travel, all that stuff, it's just a really positive thing for the community. So thank you for letting me be a part of that.
Thank you. Thank you. And Subira, I think you and I have had some conversations about my personal goals, which is to, first of all, I'm over paying all this money in taxes every year. I'm over it. I'm over it. But also, as a business owner of a podcast, owner of a consulting business, would love to continue to build my growth strategies on tax and entrepreneurial growth. So I'm excited about the topic today.
Yes, me too. I'm hoping that you and the audience derive some value from what I'm going to share with you guys today. So let's jump into it.
Let's get into it.
right. So we're going to be talking about tax planning as a means to building wealth. Um, as Tony said, my name is Subira Louineus. I'm a Detroit native, born and raised, graduated from Cass Tech High School. I currently reside in New York City. I've been working in finance and accounting for 15 years, and I mainly have worked in nonprofit industries. I figured if I was going to use my skill set, my expertise towards something, I'd rather give back to community, to everyday people who actually need my support. I just think that major corporations, they have all the resources, they have all the tools, they have all the money that they ever need, and they really don't need any help. So I rather, help my people, everyday people. And I like to say that I'm here for Main Street, not Wall Street. So today we're going to be learning some skills to help everyday entrepreneurs to kind of maximize their tax savings and introduce a concept that you may not have heard of before. We're going to be talking about tax planning. So tax planning is different from tax prep. A lot of people are familiar with what tax prep is. It's that necessary evil that we have to do once a year, April 15th. And a lot of time the focus is on just getting it done. You don't want Uncle Sam knocking at your door. You don't want to be hit with any penalties. It's very historical based. If you're thinking about April 2025, we were all working on our 2024 taxes. Everything, all the financial decisions that we had made were already behind us. There was nothing we can do about it but pay the ticket. So tax prep is really just a way that we stay compliant. Nobody wants to get in trouble with the IRS. No one wants the penalties. We do the bare minimum to get it done and get it out the way. And that oftentimes puts taxes in this kind of, it has a weird negative connotation because nobody wants to think about it. Nobody wants to pay it. Let's get it over with. So tax planning is a more proactive approach to your taxes. What I do with my clients is what we try to do is align not just their business goals and their personal life, but also their future goals. So building wealth as well. We try to align those things and take a proactive approach to taxes because guess what? It's coming. It's coming every year. Everybody knows that it's coming. Everybody has to pay it. So why not get ahead of it? And by getting ahead of it, you're able to unlock savings and oftentimes save a minimum of $10,000 every year if you're able to plan ahead. Because the IRS doesn't like us to look back on that 2024 information and then try to tweak things and adjust it so that we can get the savings. So the goal is to be unlocking savings year round based on strategy aligned tax strategy. It's also very focused on growth. I'm all about growth. The name of my business is Expanse Financial Services. I want people to be thinking about scaling, growing, and what that means for them. I'm a big believer that stronger businesses not just build stronger communities, but stronger businesses build stronger families and open up doors to generational wealth. So tax planning is future focused. Tax prep, we're looking in the past. Tax planning is proactive. Tax prep is reactive. Let's start to get proactive with our approach to our taxes. Okay. So what we don't realize sometimes is just how much we're paying in taxes. Today, we're talking about income tax, but when you buy something, you pay sales tax. When you get your paycheck, if you're a W-2 worker, the federal taxes come out, the state taxes come out, all those other additional taxes that you have to pay go out before your paycheck even hits your account. If you own property, then you also have to look forward to property tax. And it's not just a one-time thing, right? If you invest in real estate, you have capital gains tax. And if you have a certain amount of assets, you cannot even escape taxes in your death. There is a death tax. So we pay a lot of taxes and we don't even realize it because it's going out a little bit at a time, a little bit here, a little bit there. there's an organization called the Tax Foundation. And what they do is they try to research and study what taxes really mean to American citizens, the impact it has, the implications of taxes. They track a lot of the tax laws, changes, things like that. They've tried to come up and capture what it would look like if every American were to work 8 hours a day, 7 days a week. We're talking Sunday through Saturday. How long it would take America to pay off its tax bill. And they call that the Tax Freedom Day. They said that by April 18th, that would be when Americans have paid off their tax bill. And that's 7 days a week. I know a lot of people only work Monday through Friday. If you were to take out weekends, that would easily tag on another month to this. Can you imagine making money and it just going straight to your tax bill every, time you got paid? It's a lot of money. High net worth individuals that we're always talking about, President Trump, Bezos, the billionaires, the one percenters, they spend hundreds of thousands of dollars, if not millions, to strategize to avoid taxes legally, not evade them, to avoid taxes legally. The thing is, a lot of people think that those strategies are only available to those people. The tax code is public domain. Okay, it's public domain. Everybody has access to it. The thing is, people don't always realize that they can access it, or they don't know who to go to not just prepare their taxes, but strategize using the tax code so they can actually hold on to some of that money. Okay, we're going to have a quick commercial break.
And I can just tell you, Subira, I've already learned quite a bit in just the first few minutes. And I like that you talk about that we think that you have to have a certain amount of income or revenue coming in to really invest in this tax strategy. But really, whether it be, 10 cents on the dollar or whatever that is, we're spending taxes every single day. And if we look at how much money we spend over a year, I'm sure it's insane. So we can definitely continue to think about creative ways, especially us as entrepreneurs, whether you're a small, medium, or large business owners, on different ways to strategize. And like you said, preparing to do your taxes is almost kind of like reactive, right? But planning throughout the year to strategize is where you want to get to. So I'm looking forward to that. So before we get into the rest of the presentation, we are definitely going to hear from our sponsors. So I want to remind everybody, if you are interested in advertising on the Detroit Girl Transform podcast platform, whether it be banners, advertisement, commercials, please make sure you email me at dgt313podcast@gmail.com. We are happy and pleased for our continuous sponsorship from Potty Products, but we have some other individuals who are interested in sponsoring us, so we're excited about that. So over to Potty Products for their commercial.
We asked a group of scientists, what does it take to make the perfect toilet paper? And here's what they said. That's right. Use Potty Products, please. Thank you.
You always see me jamming after every commercial. Yeah, just be. So again, as a reminder, if you want to be a part of this journey of transformation with the Detroit Girl Transform team, make sure you like and subscribe to our YouTube channel. And if you're interested in advertisement, make sure you contact me at dgt313podcast at gmail.com. I'm looking for some more transformative people who are looking to continue to invest in a better version of you. So, Subira, I'm excited to continue this conversation. This is really helpful for me as a business owner, as well as just someone who wants to continue to save money. So, I think it applies to non-business owners as well. So, I'll pass it back over to you to get into this meaty topic of really planting seeds in our financial wealth.
All right, let's do it. Okay, so as I mentioned before, a part of tax planning is aligning our business lives, aligning our personal lives, and aligning our future goals with things in the tax code. If you're a business owner, you are already familiar with taking tax deductions. I want you to start to think about every expense that you incur and take it through this filter that I like to call SAVE. Does it support the business? Is it actually used? Is it value conscious? And is it essential? So, things that you are going to need to serve your clients or your customers, is it for your business if you incur an expense? Do you regularly use this expense? Is it ordinary? Is it a value conscious expense? Is it like not luxurious or extravagant or over the top? We always see these people buying Lamborghinis online to get a tax write off. But if you own a bakery that's, bringing in $20,000, is that a luxurious or extravagant purchase that you're going to be writing off? And then is it essential? And if you do this, you'll start to realize that there are a lot more things that you can write off than that you're probably already taking. So we're going to start talking about ways that we can maximize tax deductions as a business owner. And then we'll get into some less common strategies that people may not know and how you can start taking advantage of those and the rules around them. Okay, so if you're a business owner, you are familiar with these. So the way that we can start to think about things, if you are having, let's say you want to go to happy hour, you want to get that wing deal, the cheap drinks, you're going to be going to happy hour anyway. Now you are going to go with your friend who happens to be a contractor for your business, and there is a project that you guys need to finish to wrap up. Instead of just taking that happy hour and hanging out, what you can do is incorporate a business conversation and document that. And now that those wings, that drink, the tax, the tip, that's all 50% deductible now. So I want you to notice that you are going to do the happy hour anyway. Now you can do it and actually write it off because you discussed business over that meal. And of course, always document it. Another example of an easy way that you can take more advantage of these common tax deductions that you're already taking as a business owner is if you plan to travel. So let's say you're doing a quick couples getaway to Miami. You also have properties in Florida. So instead of just, hitting South Beach, stop by, visit your properties. If you have the skill set, do a little maintenance. If not, you can just check in on them, especially if you're renting them out to people. It's always good to, check in and see how your property is doing out of state. You can also network with people if you are in a certain industry, real estate, for example. You can go to Eventbrite, go to a networking event and do work for your business. That is work that is that first S in that SAVE acronym that supports your business. So now you're able to, yes, go on that vacation, spend some time with your significant other, but you're also able to write off a portion, if not all, of that trip. So these are some simple ways that you can start to take more advantage of the deductions that you're already using. Of course, we have the vehicle expenses. You can write off your maintenance. You can write off the business portion of your usage. There's a wonderful app called Mile IQ where once you finish driving in your car, a notification will pop up on it, and you will swipe one way if it was for business and another way if it was for personal. Those miles, they start to add up, especially if you have to do some traveling in your car for your business. Advertising and marketing is impossible to get around, so please make sure you're doing it already. Get the write-off for all the spending you're doing for advertising and marketing as a small business. Supplies and equipment, you can even write off the expense, or you can take depreciation depending on how your business is set up. And professional services, so people like tax strategists and legal services, things like that, all of those are write-offs. So please take advantage of them and think about ways that you can align your business and your personal life, the things you're already going to be doing, and that'll help you rack up some additional dollars on your deductions. Now we're going to get into some less common tax deductions. So we're going to first talk about the Augusta strategy. This comes from a golf tournament that used to happen in Augusta, Georgia. That's where it got its name from. And homeowners would rent out their home to golf tournament attendees. And a gray area started to occur with, what could be counted as taxable income, if things should be counted as taxable income. Congress stepped in and they decided that they could rent out their homes to their business tax-free for up to 14 days. So what that means for you, even though you don't live in Augusta, Georgia, even though you're not in the golf industry, this is something that has been codified and it is available to everyone. You can rent your home as a homeowner to your business for up to 14 days. And on the personal side, you do not have to show that income. And on the business side, you get to take the write-off. Now, with this strategy, just like everything I went over today, please work with a tax strategist, a tax professional to implement these things. There is nuance sometimes, and even though you can Google things, it's best to lean on a professional to make sure you are executing things correctly. Switching to an S Corp. I hear so many conversations about S Corps. It's one of the most common questions I get asked. And yes, it is a tax saving strategy if done correctly and for the right business. So oftentimes people think that having an LLC is a tax saving strategy. Having an LLC is legal protection. So legal protection is great. I definitely recommend it. But what that means is if someone were to be upset with you, client, customer, and decide to sue you, if you have an LLC, they cannot go after your personal assets. So it's a great thing to have. As long as you're not commingling funds, that's another thing I try to suggest to business owners out the gate, is to make sure you have a business bank account separate from your personal bank account. Because then that LLC, if there's too much intermingling of funds, you've now pierced that veil of protection. And now they can come after your personal assets if you were to be sued. So it's great to have, not saying don't get an LLC. What I am saying is an LLC is taxed the same as a sole proprietorship. Sole proprietorships are taxed a 15.3% self-employment tax. By switching to an S Corp, you can reduce that self-employment tax. If you pay yourself a reasonable salary, you can take distributions and there will be no self-employment tax on the distribution. So you take the salary, a reasonable salary, and you take the distributions. But on the distribution portion, you do not have to worry about self-employment tax. So it can be a great strategy. But as I mentioned, you have to be able to pay yourself a reasonable salary. So if your business hasn't gotten to that point yet, and typically for me, I don't recommend that my clients do it before they're making $50,000 in profit, and that means after expenses. So yes, you need to make sure this is a strategy that you can keep up with. Otherwise, it can be more of a burden than a solution. Another great strategy is hiring kids. If you have children, put them to work and, age appropriate work. They can file papers. I started having my daughter manage my calendar a little bit, and she's 8 years old. So there's little work that your kids do. They can clean your office, or, if you work in a bakery, they can help out in the bakery, whatever it is. You can hire your kids and you can pay them up to the standard deduction tax free. So that is a great strategy to have. And then what you do with that money afterwards is even better. Now you've got that money that you've paid them tax free, and you can take that money, you can invest it in their college fund, you can pay for their activities, if they're in them. It's up to you what you want to do. You can start a retirement for accounts for the kids and use that money toward there. But like I said, a little bit adds up to your larger tax bill. So that little bit adds up to reducing it and increasing your savings. Another strategy is the work opportunity tax credit. Now, this one is set to expire at the end of 2025, but you still have some time. And if you're a person that is very community focused and you want to help out people in certain groups that have faced hardships, they're on certain benefits, they're ex-felons, summer youth who are looking for jobs, you can take a tax credit for this. It's about 40% up to $6,000, which is still a nice amount. And that's per individual that you hire that is in this target group. So this is a great one to take advantage of if you want, especially if you're looking to hire people in the community to generate the economy in your local community. But if you just want the tax credit, you have this option to hire people from these target groups to help you to reduce your tax bill. Now, up until this point, we've talked solely about deductions. The work opportunity tax credit works a little bit differently. And I'll explain, just because I know we may have different understandings of taxes that are listening in. Deductions are going to reduce your taxable income, and credits like the work opportunity tax credit is going to reduce your tax bill. So after you've determined your taxable income, you see what the tax bill is, let's say it's $10,000, and you're able to take a $2,000 work opportunity tax credit. Now your bill is $8,000. I also want to mention that, like with all these strategies, they have to be implemented a specific way. This one, you have to, report to the IRS within 28 days and a few other things. So make sure you're taking the right steps to accurately get these credits, get these deductions, so you don't trigger anything with the IRS. Okay, so I wanted to briefly just show you what this could look like when you start really aligning your personal life with your business life, when you start thinking more in the future than right now in the present. These are very small numbers, just so it's, digestible. It's just for illustrative purposes. But I want you to think about if you are a W-2 earner and you make $2,000 a month. You're going to have all these regular expenses, the rent, the meals, etc. When it comes time to file taxes, the government, the IRS, is going to say, okay, pay taxes on this $2,000. Now, on the other side, on the right, this is business income that you earned in the same amount, $2,000. But now, because you're able to see all these different save deductions, they support your business, they're actually used, value conscious, essential. You're starting to look at things differently and see where you can take deductions here and there. Now your total expenses, instead of the $1,200, is $600. So The government treats businesses very differently. They're going to say, oh, you have these expenses. Please don't pay taxes on that. Deduct it from the income that you made. And now you only pay taxes on $1,400. So if it's the same tax rate, the same 25%, now you pay $350. That's $150 in savings. And I know that may not seem like a huge amount, but remember, we're using really small numbers. There are people in here that make twice as much as that, 10 times as much as that in a month. And if you were to take that $150 of savings and multiply it by 12 months, that's $1,800. It starts to add up. You see that? So if you were to just double that 1,800, so that is $3,600, that's possibly another contractor you could hire so that you could have taken on that project that was going to help you to generate significantly more revenue and help you to reach your wealth building goals quicker. So this little dollar here, dollar there adds up, and we need to start finding ways to hold on to this money. I don't know about you guys, but there's been plenty of times where I see some construction project going on, some initiative happening in the city. And I'm like, I can't believe my tax dollars are going toward this. Like, I don't understand it, who signed off on it, who approved it. I know I'm not the only one. But the thing is, your tax dollars aren't always going to be used the way that you want them to be used. So you might as well legally avoid paying those taxes and put them to good work. And that good work means different things for different people. It could mean just sending your kids to college. It can mean helping you to buy an investment property to help you on your path to generational wealth. It can mean reinvesting that money in your business because you want to grow beyond, a small mom and pop. You want to franchise your business. Holding on to every dollar and reinvesting it back into your business is going to help you to reach those goals faster. So I want us to start to think about this because these are small numbers. A lot of us are making more than that, and they have a large impact. Okay, so the takeaways that I want you to have with you is that there is a difference between tax preparation and tax planning. One is very reactive, one is very proactive, future focused, goal aligned. Tax planning is powerful, is not just for the wealthy, it's not just for Trump and Bezos and all the other ones. It is for you. It is for you to take advantage of. And I'm not saying you're going to come out paying $0, but who knows? One day you may have the assets and things that you need in place to do that. I'm all for it. But you can, at minimum, I see my clients save at least $10,000, and that adds up year over year. I want you to hold on to that money and do something important and meaningful with it. I want you to take away the SAVE acronym. Start looking at your life through that lens. Is it going to save and maximize my deductions? Does it support my business? Is it actually used? Value conscious, essential. Align your business and your personal life to help your pockets out, which brings me to my last point. There is so many things, like I said, that you could be doing with this money. We often hear of complaints of things that are happening in the community, the gentrification, the kids aren't being educated the way that we want. Those are things that your saved tax dollars can go toward as well. Us pooling our resources together can be powerful if we all believe and have this understanding that wealth doesn't just have to be for others. It can be for us too. And it starts today. I have this quote that I like to say to myself is that my future is non-negotiable. And it helps me when I am having troubles making adjustments or I'm, being too in the moment versus looking down the line and seeing what I'm actually building. I like to try to shift my attention and remember that my future is non-negotiable. Am I going to be pleased with myself if 5 years, 10 years, 25 years from now, I don't have the things that I wanted? I haven't built up more wealth. I haven't built up something that I can leave to my kids, to my grandkids, because I wanted to constantly be in reactive mode. So being proactive about your business finances can be very powerful and help you to build the future that you want to build. Your future is non negotiable. So if you would like to have a copy of the slides, I have this QR code here for you, and you can download them. And then my business, Expanse Financial Services, you can find that if you Google it. And you can find me on IG at Subira_ T is in Tom, L is in Larry. That is all I have for you guys today. And if you have questions, I love to hear them.
Wow, that was a lot of good information. And you're right. Sometimes I don't like how my tax dollars are spent. So I'm gonna take control. Thank you so much. And thanks for sharing the slides. We really appreciate that, because I know a lot of times we see all these cool things and we're like, oh, what was that? We can just kind of defer back to it. I know that really helps me as well. I am going to, before I open it up the floor for questions, I have one quick announcement, and then we'll go into Q&A.
All right.
So we have a fun episode of Girl Chat coming up. So Subira, you might be able to get caught up and watch it with us. So those of you who have seen all the posts and been watching the very controversial Guilty Pleasure Love Island USA, I am looking to really brief and deep dive into some meaty conversation about this episode. It really touches on relationship trauma, insecurities, how we move as a friend group, how we move as a couple. I mean, I'm a little bit older, so they move pretty quick for me, like they get love in like 24 hours. But it was a nice little guilty summer pleasure. And so season 7 has sparked a lot of dialogue about what happens when you're dating if you're not completely healed. So we are looking for some individuals to join our season 2 Girl Chat. So if you're interested, just send us a quick bio, nothing extenuous, and a confirmation that you have webcam internet, because we'll be doing a live virtual conversation. And then just 2 to 3 lines about what you're passionate about regarding Love Island and why you want to join it. Make sure you get that over to us by this Thursday, and we will be picking people to join our next live episode of Girl Chat. So thank you guys so much for that. And so now we're going to open it up for Q&A. I just wanted to advertise this great opportunity for our viewers to join and chat with us. And it could be girls or guys, either way. All right, so any questions? Does that mean, Subira, you covered it?
Great.
No questions? Well, everybody has the slides.
Yes, please feel free to download them. All right.
All right.
Did you learn anything new today, Tony? Or did something jump out at you?
Yes, for sure. I want to get to the point where I'm making over 50,000. I can transfer out of that LLC, number one.
Mm-hmm.
And also just some of the differences between, like, what's feasible, what's economical, what's something that's mandatory versus luxury. You don't want to claim too many trips because me, I'm in Europe. I got content everywhere. But having a balance of that in essentials. I do like that mileage app that you talked about, when it's business miles when you're traveling for business. So there were a lot of things that stood out to me. And also, one of my priorities for 2025 going to 2026 is starting to have those quarterly tax planning conversations before I get to the preparing to file for taxes.
Yes, you want to do it before the year ends. the year that you're going to be filing taxes. So that's awesome.
Thank
And
you.
I saw in one of the earlier episodes that you have a goal of a yacht.
Oh,
Getting
yeah.
a yacht one day. I love that because I do too. So
And I'm not talking. I'm talking about a big one, right? I'm talking about where I need a
okay,
cabin. Yeah, I
I
mean,
can
like,
go
you know,
away.
not too big, but definitely where it's like a couple of rooms. So I have a goal
Yeah.
of, yeah, a yacht, getting out of corporate America in 10 years,
Hmm.
and working for myself in maybe 10 to 15 years or so, and traveling the world. But I have some really clear goals on a lifestyle that I continue to desire.
Yeah.
So, and then I love this presentation because I could rent out my yacht when I'm not using it,
There
right?
we go.
And
There
then,
we go.
claim the gas, claim this, claim that. So, and
Mm,
Jennifer Nola said, thank you for some helpful information. Thank you for joining, Jennifer.
yes,
So,
thank
yeah,
you.
so we hope to see you all doing some great things. Make sure you post on the IG or on our Detroit Girl Transform Facebook pages. Give us an update. Let us know how some of these tips and tricks have benefited you as a business owner or as someone who is looking to grow your wealth and your legacy. So keep us informed about how you're doing. And Subira, thank you for an amazing presentation. You gave a lot of nuggets, a lot of tools and resources. I totally feel empowered to go and take on my tax strategy. Oh, Brittany said this was amazing. Thank you, Brittany, for
Thank
joining.
you. Thank you. I'm glad I could provide some value to everybody listening and you.
Yes, yes. I think, as a community, the more that we empower, and I think we've learned a lot from this election, the importance of education, right? And educating
Hmm.
ourselves and not assuming that everything's for the wealthy. These are things that are for us as we continue to progress on our journey to be wealthy. So
Yes.
this is how we get here. And so thank you for continuing to give us that stepping stone. If you all missed this, if you just joining in, you could definitely catch us on the Resilient Radio Stream YouTube channel every Tuesday at 9 p.m. Eastern Standard Time. All of our podcasts are stored on there. We're also excited about expanding some of our platforms. So make sure you check out DGT. It's transformation time, baby. Happy Transformation Tuesday. Thanks,
Yeah.
Vera. Thanks, everybody, for
Thank
joining.
you.
Bye.
Good night.